Hey, She Slayers, and welcome to another episode of She Slays the Day podcast. I am your host, Dr. Lauryn Brunswick, and I have been sitting and waiting on this episode for a while now. I waited patiently for the interview to happen. And then after the interview, I knew that we were trying very, very hard to get Barbara Schreihans to Cairo WealthCon. And she was thinking it was going to work, but we didn't get confirmation for a little while. And I wanted to wait. So when I did her intro, I could officially say this is going to be one of the keynote speakers at Cairo WealthCon in Miami, October 18th and 19th. And I've done a couple of her like free webinars and things like that. And it's just always packed, packed with information. So this is going to be one of those pen and paper ones. You're going to want to take notes. She drops a ton of tax strategy and just ways to save money on your life and taxes. So you're going to love it. Let's see. What do we have for new? VIP tickets may be sold out by the time you hear this, but you'll get to hear Barb no matter what because she's on the main stage. But if you go to the website to buy your ticket and you see VIP still available, I would grab one because there's like 9 left. So grab one. Also, oh my gosh, my ADHD has been insane lately. I literally had to get what's called a task buddy. So if you're not in the ADHD world, they're called task buddies. And I didn't really understand it until I was like, I've read about it and I'm like, And then today I signed up for a 45-minute workout. I mean, by signed up, I mean, I pushed the play button on a 45-minute workout on the Peloton app. And I'm like really working on being more disciplined. This surprises my business coach a lot when he was like getting to know me. He's like, what's something that would surprise me about you? And I was like, I'm not disciplined at all. And he's like, what? Yes, you are. And I'm like, no, I'm really not. I will like quit on a workout, quit on a book, say like, I'm not going to have more than one glass of wine at dinner and be like, say lovey. It's fine. I really don't have that. I think it's the impulse control. It probably goes with the ADHD. Anyways, so I'm trying to like baby steps here. Say like if I start a 30-minute workout on, and this is only if you work from home, like if you go to a class. I haven't gone to a class in forever because guess what? They don't have workout classes where I live. I know. Oh no, that's not true. At my gym. So I work out at home. And so it's just real easy to quit. So I start 45 minutes and I'm like, I am going to finish this mofo because this is like one of my things I'm working on. But it doesn't mean I finish it in one go. So I will pause for like these little like ADHD breaks where I'm like, what is Instagram doing? And I'll go see if I have any DMs from people, or I'll get like a thought in my head that I need to send a voice text or voice memo to someone. It's funny if it's like actually not a voice text, but a voice memo, because then I'm like kind of out of breath. And so I get all the way through except for the final 8 minutes. And I've paused like 2 or 3 times at this point, and I'm like, I cannot get myself to finish this 8 minutes. And so I said to Ty, my 9-year-old, like, hey, I need you to come work out with me. And so she came and worked out with me the final 9 minutes and I was able to complete it. But then I was like, oh, this is so cute. This is like make America healthy again. Like I'm getting my kid to work out. And so I was like, all right, pause. Or I'm just like on the break. I'm gonna go grab the tripod. And I like took a little B-roll of her and I working out together. So I actually didn't, I did complete it, but I didn't complete it without being distracted. So I don't know. Something will help. So I'm working on it. So let's talk about Barb. So Barbara Schreihans is the founder and CEO of Your Tax Coach, the creator of the Write Off Your Life course, and voice behind the life-changing Money podcast. She's a kick-ass tax strategist, business coach, and all-around master when it comes to wealth and finances. Barbara aids business owners and high net worth individuals in saving tens of millions of dollars in taxes while also growing their profits. When she's not leading her team, coaching clients, or dreaming up new goals for her company, you can find her drinking coffee, hanging out with her family, and traveling the world. So let's do a quick little check in with ourselves, get ourselves centered, our brains ready. Do you guys see that this is why I have to pray? Is because of the ADHD. It's like, okay, we're not going to multitask. I mean, we are multitasking, but it's okay. We're like prepping our brains, prepping our hearts for whatever message needs to come through for us. God's going to make it real obvious for us. Take a nice breath in. We're talking about money today. Getting better at manifesting is something that is like also on my goals. So, like, God and I need to rectify how that fits like energetically. Like there's like this weird like Christian part of me that's like, but God, if I'm manifesting it, is that like allowed or is that going against your teaching? And I'm pretty sure Kevin would be like, no, you're tapping into the energy of that. So we're all going to tap into that energy right now. And God's like, yeah, girl, you go get it. Even to the boys. He's like, yeah, girl, go get it. Tapping into that super high frequency energy of abundance and wealth. And we're just like, yes, give it to us. Give it to us. We are calling it in. And God wants that for us. Supposedly, I don't know. See, like even when I say stuff like that, I'm like, does he? Does he care about tax strategy? I don't know. I don't know, but we don't have to solve it. We just need to be open to the message that we're supposed to receive. So, with that, that was our prayer. That was it today, people. I told you the ADHD was strong. So, take a breath in. Let's learn together. In your name we pray. Amen. Without further ado, here is Barbara Schreihans on tax strategy and writing off your life. Enjoy. So have you always been completely virtual? Because, okay, so you're a tax
Yep.
coach.
Mhm.
So does that mean like you used to be a boring accountant?
Mhm.
Okay. So like when did you kind of decide that you wanted to, it was like you were just doing people's taxes, right? Like in a building and
Yeah. Like, okay. So my major in college, well, if I go back even further, I started at community school because I had no idea what the hell I wanted to do.
oh,
And I was like a troubled teen and graduated high school at 16 and started community college. I got 4 AA degrees there before they kicked me out. And they're like, you can't stay here forever. Like you've been here 5 years, like, and you have enough AA degrees. So like go to university already. And I was like, but I still don't know
wait, are
what I
you
want to
Canadian?
do. No, but I
Oh,
say
you just,
university.
okay. I was
I
like,
know.
whoa, you just said go to university.
Um,
I don't know why that would have blew my mind, by the way. Well, because you're like a US tax person. Okay. Anyways, keep
yeah.
going.
So I transferred to university and I was a marketing major, but then I got pregnant in college my junior year. And I went to my career counselor and I was like, what major do I need to have where like 100% on the day I graduate, I'm going to have a job because I'm going to have a baby, you know?
Yeah.
And they're like, well, it ain't marketing. And I was like, well, shit. Um, so I'm like,
Right?
what is it? And they're like, accounting, like for sure accounting. And I'm like, accounting? Like that sounds like,
That's how you got
yeah.
into accounting.
And I just was like, but that's like old men in cubicles and, but whatever. Okay. So I ended up getting an internship at the biggest accounting firm in the world and started there after my master's. I got my master's in tax and started there after. And like you're saying, I got to this like big skyscraper building in the Bay Area and I was working with like Google and Apple and Facebook. I was there when Facebook went public. And I was like, this is what people like strive for. Like, we're on like the 30th floor and everyone's like, ooh, you work at the biggest accounting firm in the world. And I was like, this is BS. Like, we're working 100 hours a week for 57K a year. And I have a master's degree and a newborn. And the cost of living in the Bay Area
Oh,
is like astronomical, like cannot even make it. And I was like, I'm out, guys. Like I was the first person in my cohort to quit. And luckily my manager at the time had left and he recruited me over to where he started working. But yeah, I worked at a bunch of like smaller accounting firms after that because I was just trying to find like something better. Wherever I was like, there has to be a better way to do this. Like,
Mhm.
no one's actually helping their clients in tax and no one's saving anyone money. And we're just having to deliver like shit news all the time. Like, you owe this, you owe that. Oh, you're getting audited. Oh, here's a letter. And I was just like, there has to be a better way. So eventually I started my own business where it's like all we do is provide value and help people save money.
Okay. So my question for like the tax profession. So you may or may not know this about chiropractic, but I promise I'm coming back to my point here. So
Okay.
within chiropractic, there is like a great divide. Like everyone in chiropractic like knows that like you've got like rehab chiropractors, we'll just call them. I don't know what they call themselves. And they're like, we are here for pain and we don't do wellness and like,
Mm,
they should have been physical therapists. Like, they love physical therapy. And then you
okay.
have, like, these vitalistic or whatever, and they're, like, here for wellness and nervous system. You know Brett Jones really well. He's obviously in this camp. Like,
Yeah.
and so we're like, adjust the babies and, like,
Yes.
chiropractic can, like, heal so many things. And the 2, they don't hate each other, but they're, like, different.
Mhm.
So it really depends on what school you go to and like your mentorship and all of that. So within taxing, accounting, it seems like the number one question I get when I'm working with chiropractors and we start talking about tax stuff is they're like, how do you find your accountant? Because mine seems a little by the book. And
Mhm.
by the book, meaning like, I don't know, you probably like, so it seems like there's a divide within tax strategy as well within
Mhm.
accounting, where it's like, some are like, "That is illegal, and I will not." And then there are others that are like, "No, that's not illegal." Like, that's you just have to do it the right way. Like, how do you kind of what happens there? What happens? Do you guys hate each other at conferences? Like, you rebel, and you're like,
Well, what's
"You
funny is
stuck
like
up?"
I don't go to normal like accounting conferences because they are just so boring. Like, you're just like dissecting the case law and it's like, that like dry eyes commercial back in the day where like "Rah, rah, rah," the guy's just like talking. Like that's what I imagine these boring accounting conferences to be. And that's what I did for 10 years. And I was like, no more. So I only go to strategy conferences, which is much different.
So they call them
But
strategy conferences.
like, I don't know if they're exactly called that, but it'll be like
So, like,
tax planning and like saving money this way, whatever. More creative names, but it's funny because in school, like all they teach you are debits and credits, like accounting 101, like if there's a debit here, there's a credit here. And then even in my master's of tax program, all you're doing is studying case law. You're never preparing a tax return. You're never learning how to save money in taxes for people. All you're doing is figuring out like why the IRS decided one way or the other. And so even when you graduate, like nobody knows strategy ever. You have to like go out and learn it on your own. And so it's just been, 14 years of really just figuring these things out and a ton of learning. And I always say, like, yeah, there are two different kinds of accountants, like you're saying, like the boring ones and the more creative ones. And
your words, not mine.
it's really like the people that are afraid of the IRS versus like,
Yes,
I know what we're doing is legal
right.
and I will go to bat for you if it's ever questioned. And I
Mhm.
think that's the difference is like, is your accountant willing to like go to bat for you?
That makes sense. It's like it's the afraid and the educated so they know they don't have to be afraid
Mhm.
thing. So then how did you start like what got your like wheels turning where you're like this is really fun
Mhm.
helping people because, like, I can't imagine anyone like, as soon as I would learn like, I've always assumed accounting conferences were really boring. Like,
Yeah.
I'll come back from a chiropractic conference on Monday like, you just come back from chiropractic conferences, like, on fire, and you're like, "This is amazing, we have the" and, when I'm talking to patients, I will literally use the example of, like, I don't know what other professions conferences are like. Like, do accountants come back on Monday like, "God, I love spreadsheets," and I'm so it's funny, like, yeah, okay, they are as boring as I think, except for the strategy ones. But, like, I would just assume every person, every accountant would hear a strategy thing and be like, that's cool. I want to
Mhm.
immediately tell every single one of my clients. So like why why do some like get more excited and like go this? I just don't understand.
'Cause they also don't know how to price it. So they're like, boring accountants are like, "Well, I'm learning these new things maybe, but no one's gonna pay for it because 'cause they've
Oh,
never charged that way." Whereas we have always value priced,
right.
and so our strategy clients, they get everything. Like, they're paying us monthly to tell them everything that we know. And so anytime we learn anything, it's like, I'm happy to educate you, to come up with a course, to have a master class. Like later today, we're having a Q&A with all of our strategy clients, and we have different topics every month. And it's because like people need to know these things, but other accounting firms have never charged that way. Typically, they're like law firms where you're charged every like 6 minutes because that's like 1/10 of an hour. So every 6 minutes you're talking with them. So they think if they call their client and tell them about a strategy, oh, well, now I have to charge them point 0.3 of an hour, and are they gonna pay it? Whereas
Are they gonna be
everyone
mad that I like charge
yeah,
them to like call?
yeah. Whereas we like everyone pays us up front and everyone pays us monthly. So it's like you get all the thing.
Right. So I had heard just a very, very successful entrepreneur describe this question of like, how do you find the right account? And he talked about how like as your income increases, your need for and what you're willing to pay
Mhm.
for a tax strategist goes up. And so like a lot of the reality is that a lot of America, well, this is me mansplaining to you. So like let me know if you agree with it. I would assume most of America, like they don't have like they've got their, middle class to lower middle class. There's not a lot of strategy. They're looking to like file their taxes with H&R Block at Walmart type of thing. Like they're
Yeah.
getting a refund. And so then, but then when you start to become an entrepreneur or you're in these tax categories where you're like, I don't want to pay 37%, or you're like, I don't want to do that. Then
Yeah.
all of a sudden you're like, when you're looking at, well, you with the right tax strategist could cut $100,000 off what the IRS says you owe them, but you need to pay
Mhm.
$40,000 to the right accountant or tax strategist to save that 100,000. Like,
Mhm.
is that like, do you agree with that thinking about when to up level?
Yeah, totally. And you're right on like the pricing. It's like, what are you willing to spend to save money on your taxes? So if someone can save you $100,000, how much would you pay that person? Some people will tell me $99,999. Like if you're saving me one more dollar than what I'm paying you, like
And I'd rather
amazing.
give it to you than
That's what they say. They're like, "I'd rather give it to you than the IRS." And it's a business deduction when they pay me. When you pay your
Mm,
taxes, that's not a deduction. So, but then some people might be like, "Well, I'm only willing to pay 40,000 to save 100 or 25 to pay 100." So, it really just it depends, but
mhm.
then you have to get over the hurdle of like if they're not willing to pay my prices, it's like, well, then your accountant that you're already with is costing you X amount. So you think they're cheap, but if they're costing you, maybe they're
Right.
$5,000 for the year, but they're costing you 100,000 extra in taxes, like you're actually paying them
Yeah. Flipping
105,000.
that, yeah, that's a really interesting, like, they because they didn't save you money, they cost you way more
Yeah.
than 5,000.
Mhm.
Okay, so was your first course the Write Off Your Life? Is that the first course that you
Yeah, that was my first big baby.
'kay.
Um, I
And
had done
why like, what kind of need were you seeing that like, what kind of problems in working with people that you were like, "Okay, I just need to make a course so people stop messing up?"
yeah, 2 things. One was that we wanted something out there for the newer business owner because we are a more luxury accounting firm, and we like business owners that are profiting 100K or more a
Mhm,
year. Revenue doesn't matter to me. It's are you profiting 100K?
mhm.
Yeah. And a lot of business owners are not at that point, but they still want to work with us. They still want to learn. They should learn because you'll still save a bunch of money in taxes. So it was like, how can we create a less expensive offer And that is through a course. So one, it was that I wanted more people to have access to us, but then also for our strategy clients that were already paying us, and we educate them as much as we can, like I was saying, and they're on monthly calls, quarterly calls, and things like that. They still need to learn more. Like
Mhm.
I still can't be there at the cash register when you're paying for something and you're like, do I use my personal card or my business card? Like, what do I use here? And that's what the course teaches you is like, how can you turn more of those seemingly personal expenses into business expenses so that you can have more deductions and then pay less in taxes? So it was two things. We wanted our strategy clients to learn more, and I wanted access.
Right. What are some of the most common deductions that you see at that level, like that beginner level, where
Mhm.
somebody, like, let's just say a chiropractor, they own
Mhm.
a single chiropractic clinic and they've got their house. Like, what are some of the most obvious deductions that you just see people completely missing out on?
Well, not even a deduction, but they're not set up correctly. So, what entity type
Mhm.
are they? And that can really mess you up and cost you a lot of money in taxes. So, entity type, and then
Can you
a
say more
lot of
on
them are
that
not.
actually?
Yeah. So, if you're a sole proprietor, which means you don't have an LLC or anything, which I hope there are no chiropractors out there without an LLC because your industry is fairly risky. Like if you hurt someone and they sue you and you don't have an LLC, like they're going to take all your assets. I don't care how much insurance you have. So don't operate without an LLC. But
Because the sole proprietorship, they could come after your personal assets.
yeah,
Yeah.
anything that's in your name, houses, cars, retirements, like all kinds of stuff.
Retirements. Wow.
So sole prop or even an LLC. So you have an LLC, but that's it. You're paying the most amount of money in taxes when you're one of those two. Whereas when you switch to an S corporation, not a C corporation, but an S corporation, you can save up to $25,000 a year in taxes. And double that if you're both in the business, like husband, wife, which a lot of times chiropractors like meet their spouses in chiropractic
So
school.
expensive.
and
I was over in the U of M's like Carlson School of Business looking for a boy. So
Mm, nice. Yeah. At least the student loans are probably better.
yeah.
But what was I talking about?
S corp.
Oh, yeah. S Corp. You can save $25,000 a year up to, and then 50K if like you're both in the business. So that's why I say entity type is so important.
So
And
why
then
doesn't
probably
everybody go to an S corp? Because like you can't go to an S corp right away, right?
you can, yeah. You as soon as you have an LLC, you can be an S corp. But again, it's those lazy accountants. Like there's so many accountants out there that still tell people like, "Oh, you're not ready for an S corp." It's because the dang accountants don't know how to file S corp returns. They don't want to deal with it. It's a lot more work on their end. But again, it's like charge for it
Mhm.
and you'd be willing to do that for your clients and help them save money. Like if
Because yeah,
you're
I've
saving
always
them.
heard that like, oh, there's a certain point you get to that you're ready for an S corp, but that's not necessarily true.
What people are probably talking about is like, I call it like the break even point of if you're looking at it strictly from a monetary standpoint, probably 40K of profit is a good point to switch to an S corp because at 40K, you're saving 15%. So 6,000 bucks is what you're saving. But you have to pay for an extra tax return and you have to pay for payroll, which like the payroll service we use is 59 bucks a month. But, that's like what, 7, 800 bucks a year is what
Right.
payroll would cost you. Another tax returns maybe like 2 grand. So let's say you have 3,000 in expenses, so you're up 3K. So that's
Yeah.
why I like 40,000 because you're making money. But I think more people should be S corps from the beginning because you're 15 times less likely to be audited when you're an S corp than when you're an LLC or sole prop because when you're an LLC or sole prop, your return is just on your personal tax return. And if your personal return is flagged for an audit, they're going to dissect your business return like no one's business. And they don't think that those types of returns on your personal return are like legit businesses. So they're going to scrutinize everything even more because they're like, you're not a real business. You're just putting it on your personal tax return. And so if you separate it and move your stuff to an S corp return, one, auditors don't even know really how to like figure out what an S corp return is. Like if you think of it, auditors have no accounting experience. They make 50K a year and they're only looking at one line on your tax return because that's all they're taught to look at when they're at the IRS. So they just like kind of push S corp returns off because they're like, we don't really even know how to look at them.
Interesting. Okay.
Yeah.
So that was your first like big thing that you see kind of newer people into this world making a mistake is like they're setting it
Yeah.
up wrong.
Mhm. And then they're probably forgetting their home office deductions because they're probably working at an office
Mhm.
somewhere, but you can still take your home office deductions, even though you're not like adjusting people at your house, probably, but you're scheduling people, you're writing patient notes, you're doing social
Mhm.
media, whatever it might be. So take your home office deductions
Now,
and
how
then,
important is it that that is actually so like what if somebody's in a one bedroom condo and
Mhm.
like they work like their actual home office is their dining room table. Like how important is it that it's like you have a separate room or or if it's like a desk in the corner of their bedroom, it's like okay, well can you write off the square footage of your desk?
Yeah, so it has to be a designated space. So if it's your dining room table, you can't take it because it's mixed use, like you're using it for personal and business. But if it's just a corner of your room, you can take the square footage of the corner of your room. Ideally, you can have your own room in your house that's an office
Mhm.
and even like an ensuite room. So if it's a room with a bathroom, that's even more square footage that you could take. And so yeah, the more square footage, the better.
Okay.
But also the cool thing when you take a home office deduction is like you're essentially saying your place of business is at your home address. So then your miles to and from your other office are not commuting miles. They're now business miles. So now you can either take mileage on your car or you can write off your car. So if you bought a $50,000 Forerunner, you could write off 30,000 of it this year. So that's also why I like home office deductions is because it's a
Mhm.
cool way to turn your like commuting miles into non-commuting miles.
Okay, so that makes sense, but because like I've had so many people confidently say like, "Well, you can't start writing off your car until you have 2 clinics." And it's like, "What why?" Like I have 2 clinics, so it wasn't an issue, but like because they're not doing the home office thing. And
Mm,
so like yes, commuting miles are not write
yeah.
offable, but
But you can still, even if you had one office, take vehicle deductions because you're probably driving to Costco or the grocery store to get supplies for your office. You're probably going to the post office to mail some things. If you have to drive to the airport for a work conference or just driving to a conference or education or networking with people. So you can still take your vehicle deductions.
Mhm.
It's just you'll have more when you have a home office because then you're whenever you leave your home, that's business.
Got it. Okay. So let's say I am at TJ Maxx and I am buying a lamp. And this lamp, I'm telling the IRS that this lamp is for my office. Okay.
Mhm.
And maybe it is. It'll go there eventually. What, like, how much do you recommend, like, saving, recording, like, documenting like, cause some people get very, very like, I have a spreadsheet and then I put this date and like, this is what I bought and this is where it is. Like, you can get kind of hyper vigilant. And
Mhm.
then there's like kind of nothing of just like, if I get audited, I'll figure out how to tell them that I bought
Yeah.
stuff for this. So like, how do you recommend clients like manage that balance in between?
You probably won't like my answer.
Oh, it's the hyper vigilant, isn't it?
Yeah.
Okay.
Like, the IRS requires receipts and not bank statements. They will not take bank statements as a form of receipt because if you went to TJ Maxx and let's say you spent $300, well, your bank statement would just say TJ Maxx $300. They
Mhm.
can't see if you just bought 50 throw pillows for your master bedroom, or if you bought office supplies and a lamp and pens for the office and snacks for the office, whatever. So they need that detailed receipt if you're ever audited. So I always tell people keep every single receipt that you have. Try to email as many receipts as you can now. Like a lot of times
Mm,
at point of sale systems, you can put your email.
yep.
I always like get anxiety if people are waiting because I'm like, oh God, I have to type my email address in and they're waiting. So I type it wrong and then I have to backspace but I'm like, I have to because I'm probably going to lose a physical receipt. So if at least it's emailed, I have it forever. And then I just have like a folder in my email inbox that says 2024 receipts and I just drag everything in there. I don't like categorize them because I don't need to because I do that in my QuickBooks. But yeah, keep every single receipt, scan them in somehow because if you have physical ones, the magic ink disappears at some point on the
Mhm.
receipt. And
Pictures of receipts? Like, can you just take a picture of it?
yeah. Mhm,
Okay.
yeah. And like your notes app, if you have an iPhone, the notes app will turn anything into a PDF. So that's good too. So that way you don't have like your receipts in with all your regular photos because then
Mhm.
they'll get lost. But yeah, keep receipts, track everything. And then even things like when you're traveling, you should keep things on your calendar so that it's because if you're audited in 5 years, you're not going to remember what you did Friday, May 31st,
No.
2024. So on your calendar, maybe you leave today and you come back Monday, put like work trip, Tallahassee, Florida, met with Bob and Joe. So that way later on, if you're audited, you remember.
Okay. So let's talk about work trips because as I feel like a lot of chiropractors, there's kind of like two excuses that they have for travel is I'm going
Reasons, not excuses.
sorry. Yes, I knew I knew that like there was gonna be very specific language. Two reasons. So continuing ed
Mhm.
or like, I'm in Austin and I saw another
Networking.
chiropractor, networking.
Mhm.
Yes. So, like, how, one, are there like other creative reasons besides like physically meeting with someone
Mhm.
or continuing ed that a chiropractor? Because I mean, we have we have like a real estate holding thing and a media company and stuff. So like I know that opens up a lot more cans of worms,
Mhm.
but like just keeping it within chiropractic, are there other reasons that are very reasonable that you
Mhm.
would be traveling to a place?
Yeah. So I love networking, right? There's chiropractors everywhere, so you could network with everyone everywhere.
And
Prospecting,
documenting that, is that like a picture? Is
sure, if you take a selfie, like that's great documentation. Now, you don't
Mhm.
have to be like, I'm taking a selfie with you for IRS documentation. But again, keeping it on your calendar is great too. Met with so and so. But prospecting is great as well because, like chiropractic in accounting, everyone needs a tax return. So everyone could get adjusted. So anyone you meet with could be a client. So are you chatting with them about chiropractic, about your business, about what you're learning, about what you're doing? So prospecting, networking, like you mentioned, marketing is also big. So, are you posting on social media? Are you going to a certain location for marketing or social media, or you need to get this certain, you know, background? Like maybe you need to go to the beach so then you can create these videos of you on the beach to show how much better life is after chiropractic. I don't know
Right.
what your reason is, but whatever.
Yeah.
Like we went to France in December and we went there for a content shoot at all these like famous, landmarks in France
Mhm.
for our family course to show like, how amazing life can be if you structure your business a certain way. So you can go to certain locations just to get those photos or those videos. So content creation or marketing. You can go there for photo shoots, like I was mentioning. You can go to places for a board meeting. So if you have an LLC or an S corp, you have to have at least one annual board meeting a year, or if the state audits you, they can dissolve your LLC or S corp. Most people don't know that. It's a legal thing, it's not a tax thing. So don't hate on me. I'm not a lawyer, but so you have to have at least one annually. So why not have it in a cool place? Like,
Mhm.
and people are always like, well, why would the IRS let you go to the Bahamas and have a board meeting? Well, anywhere you travel, if you go to a hotel, they have board meetings. If you walk through the hallway, now that I'm telling you, you'll probably see it. But all those like meeting rooms, conference room, they say on the outside of them, board meeting room. And it's because you can have them anywhere. So why not go to the Bahamas? Like, why have it in Little Rock, Arkansas, when you can go to the Bahamas for a few days and have a board meeting? Now, again, document it. What was your meeting about? Who's on your board? You have to elect your board. They have to be appointed. It has to be in your operating agreement. All these things, which we have templates for our clients. But once everything's legit, then go to the Bahamas for 3 days and have a board meeting and document your minutes. So, maybe very common people have board meetings in December because it's the end of the year. So it's like you're maybe day one, you're going over all the things that happened in 2024. And then the next day, it's like, what does 2025 look like? And then the next day, you're like, okay, these are who we hired. These are the raises we're going to give out, bonuses. This is who we're firing. Like, there's a lot of different topics and reasons you can have a
Mhm.
board meeting.
Got it. So, what have you seen? Like, who have you talked to in your friend group about like you n- content creation?
Mhm.
The IRS has got to be so annoyed with this marketing content creation. Uh, how do you feel about the word loophole? I don't feel like we
Yeah,
could.
sure.
Okay, okay,
Love loopholes.
okay. So if I'm a chiropractor and I'm going to Paris
Mhm.
because I'm going to talk about that gluten is different in America than it
Yeah,
is in
sure is.
Paris. Real thing.
I can't have gluten here, but that's why I go to Europe all the time, literally just to eat gluten.
So, like, how many like, if I'm just like putting myself in like an IRS auditor being like, so you wrote off $12,000
Mhm,
of travel so you could do a single Instagram reel
mhm.
about gluten in Paris? No. But yes?
So, this is cool. You'll be the first person to hear this because it just happened yesterday.
Ah,
We have one client under audit right now, which most people are like, would freak out about it. I always get so excited because I'm like, what can we learn? And like, how amazing is our documentation? And what is the IRS agent going to say? So, we have a client who's an online business coach. She makes millions. And her marketing expenses are the most I've ever seen in any business, right? Like it's a red flag how much she spends on marketing. Okay. She had, let's say, 10 instances in 2020 where she rented a place out for eight to $10,000 a day. Some would say a little excessive, right? Like $80,000
right.
or $100,000 in to go rent a place to record content. The agent passed it and said it's totally fine because the client could justify, well, this $8,000 stay where I created 3 reels, when I post those, I think they're to like promote a master class, let's say. Those master classes on average get me $80,000. So my $8,000 stay is completely justified. And the agent said yes. And we had them say yes yesterday. So that was like a huge win. So they're basing it, if you want to look from the agent's eyes, they're
Okay.
basing it on how much money is it bringing you?
Yep.
So
So
you could,
yeah. So, like, if you were going to only do a single post, you may want to beef it up and saying, like, and make it for like a new patient, like, because you could connect. Well, if I get 6 new patients from that
yes.
at $2,000 a piece,
Mhm.
that is
Yeah. So
okay.
try to link it with revenue is what they're looking at. It's like, is it reasonable to spend this if you make this? Now, if you're spending 20 grand to make $5, like that doesn't make sense. But if you're spending 20 grand and you're making 50, maybe
Hmm.
that makes sense?
Yeah. I feel like, okay, so like very few chiropractors have like an additional like like a podcast, like have a brand, a personal
Mhm.
brand type thing. But I feel like it would really open up a lot more doors for write-offs and strategy
Mhm.
if they even had like a single virtual product that they can use as explanation and
Mhm.
reason for certain write-offs.
Yeah. Totally. Or even just having a big social media presence, you know? You just creating videos to lead people into your practice is totally okay too.
Mhm.
Like, I don't think you have to have a digital product, but of course, I love them because digital products make us a lot of money. So why not, make a course on how to stretch for $20 and you sell
Right.
it to every one of your clients, you know? So then now you can take videos anywhere you travel of you stretching and it's a write off, right? Because it's going
Right.
into your course.
Yeah.
So
So
I'll take royalties on whoever makes a course.
right?
That's
No kidding. Like, you're just making people so much money. Like, who cares if you don't even sell the course? Like, make the damn course so you can
yeah.
save. Okay. So out of write off your life came write off your real estate.
Yes.
Is that because your like why did real estate become the like next subject?
So, in Write Off Your Life, you're learning like every single deduction there is out there, right? Like I put in every deduction I've ever heard of in 14 years, like how to write off your puppy and your pool and like all these things in the Write Off Your Life course. But then people take the course, they're already our strategy client, they're already saving so much money, they're already deducting all the things that then there's a next step. It's like, okay, sweet. Let's say now you're saving $20,000 a year in taxes. Well, I, as your tax advisor and your like financial therapist, I'm like, don't go out and buy dumb shit with your $20,000 as most
Mhm.
people do. Take that $20,000 and what are you doing with it to make more money? Well, in my opinion, it's real estate because not only can you make a lot of money with real estate, but it's the best thing out there that you can own for tax purposes because it will save you and can save you like so much money. Real estate can get your tax liability to zero. And there is like nothing else out there that can do that. So it was just the next natural step for us because we have so many clients now investing in real estate because they know the tax benefits of it.
So what is your like does it purely come down to preference because of like what kind of real estate you want? Or do you have certain recommendations based on the amount of money that you're wanting to invest or like, oh, well, you're a newbie, so you should start here? How do you like kind of help people decide what form? Because there's, short term, long term, commercial, just land. Like, how do you feel about land?
I don't tell anyone that they should invest in anything. I just tell them the benefits of all the things and the pros and cons of each one, and they decide. So, like in Write Off Your Real Estate, I talk about every single type of investment, like you're saying short term, mid term, long term, commercial, land, storage units, like so many different things. And there's pros and cons to all of them. It's more of like, which one are you willing to put the work into and where are you tax wise because each one is different tax wise as well.
Oh, okay. So as you okay, but in I mean, I would assume that the less real estate you have, there's a different tax situation because you just said like, well, it depends on where you're at tax-wise. So what do you mean by that?
So, real estate's a really complicated section of the tax code. If you make less than 150,000, you can take more losses on your real estate. So then I don't really care what you invest in, short term, midterm, long term, because you
Okay.
can take the losses already. If you're
Okay.
over 150, you can't take your losses anymore. Like real estate can take your real estate down to zero. But if you go less than zero, it's not going to offset your business income, which is our goal. Our goal is to have you have real estate so that the losses can offset your active income, whether that's W-2 or a business or whatever. So if you're over the 150, it's how can we write off your real estate? And there's only a couple ways you can do it. One is through short-term rentals because there's
Okay.
a short-term rental loophole, or you can qualify or a spouse can qualify as a real estate professional. And so we look at kind of those three scenarios. Less than 150, if you're over 150, then can you be a rep, real estate professional, or short-term rentals?
Okay. So I took a course or I took one of your like webinars where you talked about the short-term rental loophole. Can
Mhm.
you go into that?
Yeah. So Typically, rentals are looked at by the IRS as passive. And passive income and passive losses can only offset passive income and passive losses. So it can't offset your active income, which is businesses, W-2s, things like that, unless you have a short-term rental. And the definition is different to the IRS than what maybe you think or I think or whatever. It doesn't just mean you have a property on Airbnb. In the eyes of the IRS, you have to have a property where the average stay is less than 7 days. So you want to make sure if you do have an Airbnb that if you looked at the whole year and you divided it by how many people stayed there, not people, but how many stays you had, is your average stay less than 7 days? And if it is, and you have more than 100 hours in the property, so like you've spent 100 hours talking with people, answering their questions, cleaning, whatever, 100 hours, then those losses can offset your other active income because then the IRS says that short-term rental is not passive, it's active. And so now the losses can offset.
Got it. And then I'm sure I'm gonna hate this answer. How are you how much documentation on that 100 hours? Because with the real estate professional, there's like rules there too with like hours and like things like that. So
It's
is
the
this like
number one audited election in the tax code. If you're a real estate professional, it's just an election on your tax return, and it's the number one audited thing. So definitely keep track of hours if you're trying to qualify as a rep. And we have like template logs and trackers and things for people to keep track of their hours. But yeah, you do need to track the 100 hours for short-term rental because there are case laws out there where, okay, boom, someone gets audited and they're like, oh shit, let me make my 100-hour log. The IRS knows that you made it after the fact and they'll
how
say
do they
those
know
hours.
that?
There's so many ways. Like if let's say you made like a Google Doc, they can see, like if you go
Yeah.
into the history, they can see when you've made it.
Yeah. Yeah, that makes sense. I mean, I'm doing
So
this all correctly, so don't worry about
of
me. I'm just
course,
asking for a
me
friend.
too. I mean, even I keep every single receipt and, remember to
But,
track
like,
all
in
the things.
theory, if you started a Google Doc 6 months ago and it has, like, 3 things in it, and then you go in 2 years later and go back to that same, can they see you haven't been in here in 2 years, or they can just see when it was started?
No, they
Asking
can
for
see all the history. Go into a
Oh,
Google Doc that you
wow.
have. Mhm.
So
Yeah.
they can see if you've been in this thing 23
Mhm.
times in a year or
Mhm.
1.
Yeah. There's
Yeah, yeah,
also,
yeah.
like, watermarks and stuff on printers, if you didn't know that. Like,
What
if you
do you
take, like, a
mean?
blue light and stuff on paper, it, like, kinda watermarks your paper to know when, like, it was printed, and there's so many things, it's
So,
creepy.
if you're submitting, like, paperwork that you claim was printed but do things really need to be printed in the
No.
year? They can just be saved. But, like,
Yeah.
yeah, in the Google Doc, you're gonna be able to see when it was made. So, when
Yeah.
you're talking about oh my god, my husband's gonna hate me after this
Don't shoot
interview.
the messenger.
Oh
I'm
my
just
god. So, like, if you wrote off a trip for your board meeting, you're supposed to
Mhm.
keep board minutes or, like,
Mhm.
meeting minutes.
Mhm.
Like, they could see if you're audited from, like, 3 years ago, they could see, like, "Yeah, you made these minutes a week ago. These are
Mhm.
not your meeting minutes from your board meeting in Bahamas."
Mhm.
That's awesome. That's
Yeah.
fantastic.
But what I would do is if you have forgotten, then today just make sure you go in and sign it because even though it's after the fact, it's before you're getting audited. So you can even send yourself, and we do this in our company, like our operations manager, if we forgot to sign something, they'll be like, hi, I just completed an internal audit of our documents and saw that you forgot to sign XYZ for these dates. Can you make sure to go in and sign it?
Yeah.
And, you know,
Yeah. So when I'm just thinking about like you guys onboarding like a tax client
mhm,
because you said you're a luxury tax company, whatever. Accounting firm. I don't know what you used after the word luxury, but because I got distracted of like, ooh, I like that. Um, this has got to be what percentage would you guess are like, yep, this is exactly like what I was doing with my previous accountant, and like what percentage of people are like like, and you want me to do what with it, and you want me to do what? Like, this got to be the onboarding has
we've never had a client that is doing everything correctly. Like no
right,
one's perfect, right? We're all human.
right,
That's fine. But we take it step by step and like don't overwhelm people, and we can tell people's personalities. So like this person can handle us telling them 10 new things to do, and this person is already
Right.
freaking the F out because she got a letter in the mail from her old something her
Yeah.
old accountant did. So let's just fix that one thing first, and then we'll go into receipts, and then we'll go into the so like everyone's personality is a little different.
Got it. Okay. So I am taking away receipts need to be kept.
Mhm.
You need to log hours. And so
Mhm.
like this is for and miles. Oh
Mhm.
yeah, if you're like retroactively creating mile, yep. So
Mhm.
on that Google Doc that there's a history, you need to
Mhm.
log them regularly.
Yeah.
Yep.
Or just get the Mile IQ app, or if you have QuickBooks Online, there's a mileage tracker and the app on QuickBooks Online.
Mhm.
It knows when you start your car, and then
Ooh.
you just
Kind of
tell it
creepy, but kind of convenient.
personal and business. Yeah, it's creepy but convenient, just like all other technology nowadays.
Yeah, yeah, it is kind of completely off subject. So I'm building a course right now. Well, my VA and I are building a course and Chat GPT. And so like my VA is like, "Hey, I need a description. I needed this and this." And I have like fallen in love. Like my husband fell in love with Chat GPT like from the moment he's like one of those like techie innovator guys that's like, "This is amazing." And I'm like, "I don't know, it's kind of creepy." In the last week, I have fallen in love with AI so much. I told him, I said, "I can't wait until our refrigerator and pantry have, like, AI so they can just meal plan for me and create our grocery lists," and, like and
It's
he's like,
already there.
"Yeah, that's what
It's already
he"
out there.
I oh, I'm excited for that. Like, I am ready.
Yeah.
I'm ready for Samsung and Google to, like, roll it out to me, like, but there's people. So, anyways, I don't know what we were talking about, but, logging things. Yep.
Yes.
Receipts, logging hours appropriately. And then what was the thing we were just talking about? Oh,
Mileage.
mileage. And then board meeting minutes, as well as probably like if you're using Augusta rule,
Mhm.
like just logging all of that stuff actually in time versus waiting
Yeah.
until an audit to be like, well, I can prepare board because like most people go like, well, if I got audited, I could prepare board meeting minutes in a heartbeat. Like that would be easy. I would ask ChatGPT to make it for me. But it's easy to see that it was made in. That's
Yes.
fantastic. This has been a lovely, lovely meeting. I loved every part of this. Okay. So in kind of wrapping up, what we've kind of talked about a little bit, but like what are the options for working with you? How do people consume more of you?
Ooh. Well, I love to hang out on Instagram, so your
Mhm.
tax coach, but any social media at your tax coach. And then if you are a newer business owner, definitely check out Right Off Your Life course. But if you're like, man, after listening to this, I need a new accountant, we have a full tax strategy team, tax preparation, bookkeeping, consulting, anything and everything that you might need for like your tax and accounting needs. And my favorite thing for this year is our live event is going to be November 4th and 5th in Scottsdale. So it's like the most amazing time of year in Arizona is in November. So it's in Scottsdale at the Scott, which is it was dubbed the most Instagrammable hotel
Love
in
that.
Arizona. I love the Scott. And it's an all day event learning about taxes, how to save money, but also investing. It's an all-female speaker lineup, which I feel like you never see that anywhere.
No
It's
kidding.
usually mostly men with, like, one token female, and I was
Are
like,
men
"No, if
allowed to
I'm"
come to the event?
Yes.
Okay.
Anyone's allowed to buy a ticket, and,
You should have a token mail. Just
with the token male,
yeah.
maybe if someone drops out or something, then I'll have the token
Just
male.
like, okay, here, we're inclusive. We included a guy.
Yeah,
The number of
exactly.
times I've gotten an email of like, "Hey, this conference is looking for a powerhouse female to speak." And I'm just like, "So I qualify because that you're emailing because I have a vagina." Like, it's great.
Yeah,
We're
I
getting
know.
closer to inclusive. But anyways, okay. So Scottsdale.
Yeah. So Minted Wealth Live is our event in Scottsdale. If you just want to come to a really amazing finance event that's not boring and you'll learn how to save money, but make money too.
Awesome. Okay. So we've got your courses, we've got Instagram, we've got, do you have any like Are you out? Because you were doing webinars for a long time.
Yeah, we
'Cause
still
that was
do that.
to launch. Are you still doing webinars and stuff? And you'll see that on Instagram and so.
Yeah.
Well, this was great in its own way. I appreciate it.
Who knew
I'm sure
taxes were
you
so
ruined
exciting?
so many people's days today.
Oh,
And honestly, more likely you ruined also spouses' days because people are gonna be listening to this and then they're gonna go to their husband
yeah.
or wife and be like, "Shit, we gotta
Mhm.
do better. Gotta do better." But again, speaking for a friend, just in case the IRS is listening, I do all this. I'm fine. Don't worry about me.
Yes.
Thank you so much for your time. I appreciate it.
Thank you.
And go check things out. Go follow her on Instagram. We'll have some links to those courses below so you can more easily find her. And until next week, she slayers. Bye.